Okay. When you think about airline earnings, what usually comes to mind? Is it maybe the turbulence of fuel prices or, just trying to keep up with demand? Well, today we're taking a deep dive into Delta Airlines' second quarter 2025 financial results. And honestly, what we found suggests maybe less turbulence and more of a strategic climb. Our mission here is to really unpack the critical takeaways from Delta's latest numbers. We want to uncover not just the figures, but the story they tell for Delta, for the wider industry, and ultimately, maybe for your next trip. We're diving into the data, and I promise we'll try to find the interesting narrative behind all these financial results.
Yeah, and what's really fascinating, I think, is how these figures paint a picture. It's one of strategic resilience, especially in such a dynamic market. It really offers, a shortcut to getting well informed about the whole airline sector. And for this, we've pulled from, well, Delta's official earnings call transcript, their press releases, and also looked at several independent financial analyses to give you a pretty comprehensive view.
And it's quite a story. Delta Airlines really put up a strong performance in Q2 2025. They definitely soared past expectations. When we look at those headline numbers, earnings per share reported at $2.10, which handily exceeded the $2.05 forecast. That's about 2.44% better. And it wasn't just EPS, actually. Their revenue hit a record $15.5 billion adjusted, just a tiny bit above the anticipated $15.42 billion, but still a record. So these aren't just like good numbers. They seem to hint at something strategic going on. What's the story here, really, beyond just beating forecasts?
Well, that strong performance definitely got noticed by investors. Delta's stock jumped, what was it, 12.5% in pre-market trading right after the announcement. That's a clear vote of confidence. And, Investing Pro Data even gave Delta a great financial health score, 3.02, which is a really strong indicator of their solid financial footing. For a company to not just meet, but actually beat forecasts in this kind of competitive industry, it says a lot about their operational discipline and how they're responding to the market.
Okay, so beyond those pretty impressive headlines, what were the key things that really stood out in their financial health this quarter? What drove it?
Well, a few things. They achieved an adjusted pre-tax income of $1.8 billion and an adjusted operating margin of 13.2%. Pretty healthy. But what's maybe particularly interesting, especially for shareholders, is the cash they generated. $700 million in free cash flow just for the quarter. That brings their year-to-date total up to a really solid $2 billion. And this isn't just, a number on a page. It's the financial muscle that lets them make strategic moves. It signals they can self-fund growth and, importantly, return capital to shareholders. And speaking of that, they actually increased their quarterly dividend by 25%. That's a pretty significant statement of confidence, right?
Yeah, a 25% dividend hike definitely sends a message. So if they're beating forecasts and generating all this free cash flow, it suggests a very deliberate strategy. One of the themes I picked up in their report was about demand stability. They described overall demand for air travel as, quote, flat to last year. But they also noted some softer demand in the main cabin, especially during off-peak times. So wait, if overall demand is flat, but main cabin is softer, does that mean there's a big shift in who's flying? Or just how Delta's targeting their market? They talk a lot about these diverse high-margin revenue streams. What exactly are those, and why are they so critical right now?
Yeah, you've really hit the nail on the head there. That's core to their strategy. These diverse revenue streams are absolutely central to Delta's business model now. I mean, they made up 59% of total adjusted revenue this quarter. That provides a strong cushion against, fluctuations in the wider market. This includes areas like their premium services, think First Class, Delta One, Premium Select. Revenue there grew 5% year over year. That's significantly outpacing the main cabin. And we're talking about things like their expanded Delta One lounges, the new one in Seattle, over 200 seats, or that huge one in Atlanta's Concourse D, over 500 seats, plus new premium amenities. It's all aimed at that higher value traveler.
Right. Makes sense they're doubling down on higher spending travelers. What other streams are making such a big difference? Besides premium seats?
Well, their loyalty program is another huge one, Sky Miles. Revenue there increased by 8%. And this is driven by growth in their co-brand credit card spend and getting new people to sign up for the cards. American Express remuneration, for instance, hit $2 billion just in Q2. That's up 10% year over year. And they're on track for something like $8 billion for the full year from Amex. Just think about that. $2 billion from Amex in one quarter. It's basically the money Delta earns from its co-brand card program. It just highlights the immense value of that loyalty ecosystem. And the executives were saying the program has the highest satisfaction in history of our card. Plus, they're expanding partnerships, like the new one with Uber. Now, SkyMiles members can earn miles on rides and deliveries. Some cardholders even get complimentary Uber One. It's all about extending that ecosystem beyond just the flight itself, you know?
Wow, okay, $8 billion potentially from Amex for the full year. That's
Yeah.
that's almost half their total adjusted revenue just from one partnership. That is a staggering figure.
Right.
Really shows the power of these loyalty programs. How did their international business fit into this picture? Did it fare as well?
International revenue grew a solid 2%. So yes, positive growth there too. They saw record Pacific revenue actually, up 11%. That's largely because they've restored their Trans-Pacific network post-pandemic. Transatlantic revenue was also up 2%, even above the record levels they hit in 2024. And interestingly, they mentioned a trend. International shoulder season travel seems to be improving. Apparently, consumers are shifting away from peak summer a bit, maybe to avoid crowds or the heat. It's a subtle thing, but it could be an important shift in travel patterns.
Okay, that makes sense. And what about corporate travel? That's often seen as, the real backbone for airline profits. Is that segment bouncing back strongly?
Corporate sales were up, but just low single digits year over year. And it was primarily led by domestic travel. The CEO at Bastion gave some interesting perspective here. He said, our core consumer is in good shape and continues to prioritize travel. And he defined this core consumer as households earning $100,000 or more annually. That's about 40% of U.S. households, he noted. But he also pointed out that business travel is still, well, significantly below pre-pandemic levels. He suggested there's another 15% or 20% of business travel that isn't being done. So the implication is there's still quite a bit of room for growth there. It's recovering, but slowly, with potential still untapped.
Right. So attracting those higher value travelers is key, and there's still hope for more corporate recovery. But even with strong demand in those specific segments, airlines always operate on such, well, razor-thin margins, don't they? How is Delta balancing this focus on revenue with managing the basics? Operational costs, efficiency, especially when things are still pretty dynamic out there.
Yeah, that's always the challenge. On the cost side, though, they're showing some really strong discipline. Their non-fuel unit cost growth, that's CSMX for the analysts, was 2.7%. And that was right in line with what they expected, which is good. That metric is key because it shows how efficient they are outside of fuel prices, which they can't control as much. This is about the stuff they can control. And they're actually projecting the next quarter, the September quarter, will be their best for non-fuel unit costs. They expect it to be flat or even slightly down compared to 2024. They also got a break on fuel expense, which was down 11% year over year. The average price per gallon dropped 14%. That helps, obviously. Plus, they managed to achieve 1% fuel burn savings just from operational improvements. Now, 1% might sound small, but that equates to saving 45 million gallons of jet fuel. That's significant.
Yeah, 45 million gallons saved. That's definitely not small change.
Yeah.
That's pretty impressive efficiency. And they're also leaning into technology too, right? How are they using innovation to push these efficiencies further and maybe improve the customer experience?
Absolutely. Technology is a big piece. They're partnering with a company called Fetcher. They're using AI-enhanced pricing solutions for revenue management, trying to get smarter about pricing seats. It's still in testing, currently on about 3% of their domestic network, but the goal is to get that up to 20% by the end of the year. And they said the early results are encouraging, which, raises that interesting question. In an industry with such tight margins, how much can tech like AI really move the needle on the bottom line and on customer satisfaction? For the customer side, they're launching something called Delta Concierge later this year. It's a virtual personal assistant built right into the Fly Delta app. And they already launched Fly Delta App 7.0, which has better real-time updates. Oh, and the rollout of fast, free Wi-Fi for SkyMiles members, that's nearing completion. They have 925 aircraft equipped already and expect 95% of the mainline fleet to have it by the end of 2025.
So yeah, a lot of work behind the scenes to make things smoother and more efficient. I have to say, my last flight, the app did feel easier to use with the updates. Is that kind of anecdotal feedback matching what Delta's seeing from these tech rollouts? And what about their MRO business? That's maintenance, repair, and overhaul. It often flies under the radar for us passengers, but it's a big part of their operation, isn't it?
Yes, MRO is definitely important, and their MRO revenue growth actually accelerated this quarter, up 29% year over year. And this isn't just about fixing their own planes. This is a strategic growth area where they sell their maintenance expertise to other airlines and companies, external clients. Delta views this as a potentially significant future revenue stream. They're talking about maybe $1 billion to $3 billion in potential there. And they highlighted a new deal they signed with UPS maintaining their next-generation engines. That really underlines the potential they see in MRO. It's just another smart way for them to diversify revenue beyond only flying passengers.
Right, leveraging their own expertise. And speaking of growth and strategy, they're also making some pretty big moves on their network and partnerships too, aren't they? Expanding their global reach seems like a major focus.
Yes, exactly. Expanding that global footprint is definitely key. They talk about strengthening their network through, quote, best-in-class partnerships. They say this gives them access to over 90% of global demand, which is huge. This includes things like strengthening their partnership with WestJet. They took a minority equity stake there, and they announced plans for a big global partnership involving Indigo, Air France, KLM, and Virgin Atlantic. The idea is to better connect India with Europe and North America. They also expanded their existing joint venture with LATAM to include Argentina now.
Okay, so strengthening ties. And are there new direct routes coming online as part of that expansion?
Absolutely. They launched new non-stops like Salt Lake City to Seoul Incheon. That opens up a new gateway to Asia for them. And they announced new routes starting in May 2026, Seattle to Barcelona and Seattle to Rome. Plus, for this current peak summer, they're operating their biggest ever transatlantic schedule. That shows a clear commitment to those high-demand, often high-margin international routes.
Okay, so adding routes, strengthening partnerships, but beyond just where they fly, they're also being smart about the planes themselves, the actual capacity, right? It seems like very deliberate fleet management.
Indeed, very deliberate. Delta took delivery of 10 new aircraft in Q2, but they also retired 10 older ones. So for the full year 2025, they're aiming for a net addition of only around 10 aircraft. It's controlled growth. And crucially, they proactively adjusted their capacity after the summer peak. They're cutting domestic seats, particularly in the main cabin and on off-peak flights, really trying to align supply precisely with expected demand. And it's not just Delta doing this. The industry as a whole has actually cut capacity quite significantly, around 4 percentage points since April. And interestingly, this is happening in what's not a recessionary environment. It signals airlines are being much more disciplined about supply to protect profitability, not just chasing volume.
Right, that makes sense. It really feels like Delta is focusing hard on the things they can control, network optimization, fleet management, costs. So given all this, what's their outlook now for the rest of the year? Are they feeling as confident as these Q2 numbers might suggest?
Well, the big news is they've actually restored their full-year guidance, which is quite a signal of confidence, especially considering just a few months ago in their previous earnings report, they were citing broad macro uncertainty. Now they're projecting full-year EPS between $5.25 and $6.25, and full-year free cash flow between $3 billion and $4 billion. That free cash flow figure is important. It's consistent with their long-term targets, and it's what allows them to plan for paying down $3 billion in debt this year while also returning cash to shareholders through dividends and potentially buybacks. It really indicates a shift, I think, from just navigating challenges to actively executing on a profitable growth strategy.
Okay, so a pretty strong vote of confidence for the rest of 2025. What about the immediate short term? What's the outlook for the upcoming September quarter specifically?
For Q3, the September quarter, they expect total revenue to be somewhere between flat and up 4% compared to last year, with an operating margin projected between 9% and 11%. And that translates to an expected EPS of $1.25 to $1.75 for the quarter.
Okay, and what's the wider economic picture they're painting around these projections? Are there still any, red flags or significant challenges they're keeping a close eye on?
Well, the general expectation for overall economic growth in 2025 remains pretty modest, around 1.5%, so not exactly booming. And Delta does acknowledge several risks and challenges they're still navigating. Things like managing that non-fuel unit cost growth we talked about, keeping it in check is crucial. Potential impacts from making these capacity adjustments and retiring parts of the fleet that can affect operational efficiency temporarily. And then there are the external factors, potential geopolitical tensions, any regulatory changes that might come up, and just the constant significant competitive pressures within the airline industry itself. So yes, they're confident, but they're definitely not, naive about the environment they're operating in.
Right. It's clear they've navigated a really complex environment and delivered some impressive results this quarter. If you had to boil it down, what's the one big takeaway you think listeners should remember from this deep dive into Delta's Q2?
For me, this deep dive really highlights Delta's strong emphasis on operational resilience and strategic differentiation. The crucial insight, I think, is seeing that shift. It feels like a move away from just a broad growth at all costs mindset. Now it seems much more focused on profitable growth and really managing the levers they can actually control. It's about maximizing the value they get from every seat, every loyalty point, every bit of operational efficiency, rather than just, simply chasing passenger numbers.
Yeah, I agree. Delta's strong Q2 performance really seems driven by that focused premium services, loyalty, efficient operations. And that's allowed them to restore that confident full-year guidance, even with the broader economy just kind of moderating. Their strategic investments in technology and partnerships also seem to be acting as key differentiators, letting them sort of shape their own path in a dynamic market. So maybe a final thought for you, the listener. As demand stabilizes and airlines like Delta adjust their strategies in this way, what does this really mean for your future travel experience? Will this focus on premium services and loyalty programs continue to reshape how we fly? And looking ahead, what aspects of the travel experience will truly differentiate one airline from another in this stabilizing but still very competitive market? Something to think about. We encourage you to reflect on these insights and consider how they might impact your own choices, whether you're a consumer planning a trip or even an investor looking at the sector.